Yeah, Emily, and the NASDAQ right now being the biggest laggard, down more than 1%. I do want to point out on our Wi-Fi interactive board also the Russell 2000 down about 0.4%. But keep in mind that the Russell 2000 out of the indices was the biggest laggard last week. So that is seeing some declines today as well. Also looking at the 10-year Treasury, we've been noting the 10-year Treasury right now at 2.74%. Looking at the sector action in equities, we're watching energy stocks that are really taking a hit, followed by technology stocks. And over on the NASDAQ 100, look at this, Microsoft down 3%. You've got Tesla that is trading below $1,000 a share, down more than 3%. You also have NVIDIA that's down more than 4%. In fact, the semis, which have been seeing a pullback, which have been getting hammered recently, some of these semis are under pressure as well. Looking at the travel sector, quite a bit of green that we're seeing. You've got the cruise line operators, the airlines that are in the green. And also looking at the banks, we are seeing a little bit of some green with the bank stocks as well. But really, energy, as I mentioned, the biggest laggard, and you're watching Occidental Petroleum down more than 4%. Also, ExxonMobil and Chevron down significantly as well today. Guys?
Ines, oil prices, of course, well off their highs that they hit in March, nowhere near $200 a barrel yet, as some people expected at the height or when the Russia's war on Ukraine started. But that has not stopped the calls by many for a recession.
Yeah, that's right. So I actually spoke to some portfolio managers. I spoke to also some oil experts, a couple of economists about the price of oil and the fact that in March, a large part of March, really, oil was above $100 a barrel. I mean, right now you're looking at WTI that's down about 4%, and you've got it at around $94 a barrel. A lot of this has to do, of course, with those China lockdowns that's influencing the markets. But a lot of experts have told me basically that the longer that you stay above $100 a barrel, of course, you do increase the risk of recession, right? But the recession really would come or demand destruction, I would say, would come if oil were to maintain around $120, around $130 a barrel. So if oil were to push up more towards 120, 130 and stay there for a prolonged period of time, then you would see a recession, because that's when you would see demand destruction. Now, I do want to point out that one expert basically told me that he thinks there likely is a recession in Europe right now because of the natural gas prices, because those prices that Europe is paying for natural gas. If we can keep the energy prices somewhat steady here in the U.S., then that would have a limited impact on consumer discretionary.